Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia, and it is so fun and exciting to be back this week to discuss the gold and silver markets. This was a week where we felt like we were petering out on the pullback. I loved that we follow Rafi Farber at the Endgame Investor. He called it the most pathetic gold crash ever. Before we jump into some of the things we wanted to discuss, which is the pullback in the markets, the rate cuts and what they mean, comments from the Bank of Canada, and of course forecasts in the market, let's just quickly review the fundamentals in the market for everyone. Gold is being acquired by central banks. It's up over 50% year over year, and central banks have been buying at higher prices. In fact, the South Korean central bank signaled their intention to acquire more gold at this point. That right there should tell you everything you need to know. It is a finite resource that you can only add to the global supply by about 1.5% per year. That means that you can recoup things where gold gets lost, stuck in a vault somewhere, et cetera, et cetera. You can recoup some and continue to increase the supply, but only by 1.5%. I also want to remind everyone, I love this thing from this stat from Luke Groman, where he talks about the idea, we do ratios on this show, gold to all the time. Gold to silver ratio. By the way, how you doing, Jerry?
Feeling better.
Yeah,
I'm feeling really good about those Jays. How about those Jays? We have game 6 coming up back in Toronto, so go Jays go. As much as we've been watching the gold and silver markets, I could kind of been disconnected watching those Jays. Family's a huge baseball family, so yeah, I think we'll be once again reconnected back to the gold and silver markets wholeheartedly.
Getting back to this Luke Groman idea, so the ratios, right? Gold to silver, Dow Gold.
Very important.
He talks about gold as a percentage of foreign held debt, that the historic average is 40% of your gold representing foreign held debt. Right now it's at 10%. And in 1980, at the peak gold, it was 130%. So they could sell off cover all of the foreign held debt and still have 30% of their holdings.
Right.
But we are far from 40% of foreign held debt being backed by gold. I like that one as well.
I thought that percentage was closer to 2%.
No, that's investor interest.
Oh, investor interest.
That's retail investor interest. Retail investor interest is nowhere near bubble territory. That bubble territory is 10%.
Oh, wow.
And we're like under 2%.
Yeah, we are under 2%.
For the silver market, and this will pertain to later on in our show, but in the silver market, we continue to have deficits of what's coming out of the ground. We're using more than what's being mined. And both metals are undervalued against the debts, for sure. So with that said, fundamentals are still in play. Supply, demand, geopolitical risks. Maybe geopolitical risks. I'd still put that out there. But this kind of leads to what I wanted to discuss before we jump into everything else, Jerry, which is narratives. Mm-hmm. There were a lot of gold analysts that noted certain narratives that got pushed out recently, and I just want to quickly discuss this concept of narratives. So first, before the pullback in the market, we saw a whole bunch of anti-gold sentiment in narrative form. The certain factions of the Bitcoin community were out bashing gold. It felt like it had been a couple years or a year at least. Frank Giustra was really tracking that on his X feed and pointing it out.
Oh yeah, the big narrative of sell your gold, buy the Bitcoin.
Absolutely, that was out there. Then there was also it's overbought. Not it's undervalued, just it's overbought. And then I saw a clip of why they were talking about gold on Bill Maher's show. I still have no idea. Just to talk about it, just to say it's a terrible thing. I don't know why you would own it. Here's why people generally own it, and it's always fear factors, and da-da-da. And it's just like, why are you guys talking about that? Now, meanwhile, at this point in time, did you know gold is now oversold?
That's correct.
Where is the media and the narratives that were screaming overbought? Where are they now screaming oversold? They're nowhere to be found.
Like it's some sort of engine where we are overheating and you got to shut the engine down for a bit. You got to change the coolant levels and change the oil. No, a healthy pullback is what we have witnessed. And you're going to have that narrative, I think, always going before the run up in gold. Even though the gold and silver markets haven't even broken out yet, we've been tracking the ratio of the silver to gold, which has always been hovering around 78 to 80, which ultimately indicate that there is no breakout in gold and silver yet. We're just moving higher, repositioning higher. Countries are moving in. Institutions are moving in. The fundamentals are at play, and they're crossing fundamentals. Silver is going back into monetary. Gold is going back into industrial. So the fundamentals are just looking more and more interesting to countries who are looking to hoard it now for stockpiles. They need this stuff for their reserves, to up their assets, and to prepare for geopolitical repositioning. I don't see it as too much of a conflict, as you mentioned earlier regarding geopolitics. It's always going to be a play. But repositioning, the chairs are reorganizing, and we're seeing new partnerships. But we're not overheating. We're not a Pinto here, Jeremy.
We're always on the same page with this stuff, because you just set me up perfectly. Because in the gold community, there's also different narratives. There are narratives out there of the sky is falling, the debts are sky high, da 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 da, and in the gold community, there's a lot of analysts out there that are very negative towards what's going on in the world, and hey, you can be that. There's other factions of the gold community that are pro gold, because it's not because the sky is falling that you're holding gold because there's going to be a collapse in the stock market, a debt collapse, debt spiral, etc. But I believe we're on the same page here, which we believe gold is being purchased not because there's going to be a death spiral in the debt, but because it's going to be revalued. And revalued because of prosperity. And revalued because if you can revalue your gold, you're going to raise the asset side of your balance sheet so high that it's going to help make your debt seem less of this mountain to climb. Because if you have a $900,000 mortgage on $1 million house, you have sleepless nights.
Yes.
But if the house value goes to 1.5 million, all of a sudden you're sleeping a little bit better. The debt hasn't disappeared, but the assets have increased.
This is, I would highly encourage and admonish people to jump on that public website, the Federal Reserve website. There was a lot of news coming out this week. Obviously, some rate cuts happened as expected. Some jawboning from Jawbone Powell happened, mitigating a potential chance for a cut in December, which has caused a pullback. Obviously, some U.S.-China truce was another factor as to why the pullback. But gold, back to its role in the fundamental, it will always be that hedge against currency collapse, inflation, geopolitical concern,
dollar devaluation,
even just being too digital. We are just so over digitized. Your wealth is just ones and zeros sitting on a bank ledger. And, we're seeing governments encroaching all the time, wanting to freeze accounts like governments do, freezing bank accounts. The whole idea of their goal is to make sure that you don't own anything, right? And you're going to be happy. Well, no, people want ownership. You're going to have your hedge. But no, we are not doom and gloomers. Here at Guildhall, we're optimistic. This is a solution because gold has now merged and bridged from hedge and now becoming a growth catalyst. Go to that Federal Reserve website because they have a paper that showed countries in the past, 4 of them exactly, that have had gold and they use gold to get out of fiscal issues. And how many fiscal and monetary problems do we have here in Canada with Paulo spewing out some stuff this week that just we don't understand what he's talking about, but we have to protect ourselves. To, countries had, got out of their monetary issues by simply revaluing the gold price, not having to sell it off. You don't have to sell it for Bitcoin.
So final thoughts on this, Jerry, as we go to break regarding the pullback in the markets. Me personally, it was moving up very quickly. It was disconcerting how quickly it was moving. If we had kept on that path, I feel like we'd probably be sitting at $70 silver right now. And a lot of people would have missed the boat. What do you say to people about the current pullback? I know Rafi Farber called it the most pathetic gold crash ever. What are your final thoughts on what we've seen in recent days in the gold and silver market?
Well, people are going to be ultimately be concerned, especially newer investors. I mean, a roller coaster with funds is not always a good thing, and especially timing. Everyone wants to buy low and have this just normally ride up, but we have to understand our reasons and fundamentals. And as long as you know that, you're going to continue to move higher and trend higher, and it will be in your favor. So this was definitely not a bloodbath, as some people called it to be this week. It was just a natural correction, a healthy pullback after a powerful rally. Both gold and silver have already had exceptional moves this year, haven't broken out. Silver was up over 75% year to date. Gold was 65%. To have a 15% pullback on silver, 10% gold, big deal. It was a breather. And from a technical standpoint, the RSI, which is the relative strength index, it helps traders measure momentum on a scale of 0 to 100. And when the RSI reading is above 70, that signals overbought. That's where that narrative came from, and it considered overbought. Then it could signal a short-term pullback, maybe ahead. Well, we got that pullback. And conversely, when that RSI ratio falls below 30, which is where we are right now, the market is now oversold. The market suggesting prices are rebounding. Silver prices are back 2%. We're back on the forefront. We round 1, round 3, whatever round we're in, we're back into the fight, and gold and silver will charge forward. But both metals moved on from overbought territory into oversold levels. We are this consolidation is very healthy. It's a healthy correction. It sets the stage for the next leg higher in metals.
And we do have some forecasts coming up later in the show. So you'll be hearing the good news of where this goes from here. So
many more banks jumping on board as well.
Yeah, it's okay to take a breather. It doesn't mean it's no longer undervalued. It's just that the market took a breather and nothing goes up in a straight line. So we'll leave it with that. However, it does mean that the prices have come down a little bit and can give an opportunity for people to get into the market. If you're looking to own actual physical gold and silver, whether direct for storage or in a registered account like an RSP, TFSA, Lira, LIF, etc., you can do that with Guildhall. The number 18778 silver, the website guildhallwealth.com. We'll walk you through it. We'll show you how to do it. We'll answer all your questions and make sure that you're very comfortable getting into the physical gold and silver market. Gold and silver have had an amazing year. They've taken a bit of a breather. This could be a perfect time to get involved in the market. We think that you'll find once you own precious metals, you'll feel really good about having made that decision to have physical product owned, whether it's taken directly, taking delivery directly, or storing it in a vault for ease of liquidity. That means you can go travel, do whatever you want, but eventually you can pick up the phone and sell quite easily, or put it in a registered account. It's one of our most popular vehicles, and this allows you to own actual physical gold and silver. It's in its own sub-account in your name. It's fully allocated to you. You can go to the vault and personally audit your holdings, and if you want to deregister your product, sometimes that can be withholding tax included for that, you can take delivery of your actual physical product. You don't have to be an expert. That's our job. We've been doing this vehicle for over 10 years, and we've been dealing in the physical gold and silver market for well over 15 years, closer to 20. So we'll help you and show you how to do this and talk to you about how to be very successful in this market. Of course, the market does the work for you. This week, one of the fundamentals for gold and silver is the value of the currency. And typically when you're cutting interest rates, you are making the dollar weaker. It means that there's going to be more inflation. And we saw this week that both Jerome Powell and Pelosi in in Canada, in the Bank of Canada, lowered interest rates. Jerry, love to get your thoughts on this, and especially about some of the comments from the Bank of Canada.
It usually is just that. So generally speaking, when any nation cuts interest rates, in which it was expected, the Bank of Canada came out at 9:45 Wednesday last week, October 29th, and they cut interest rates from 2.5 down to 2.25%, which was as expected. But it's always about the speeches afterwards, what the Bank of Canada and what the U.S. Federal Reserve, the European Central Bank today also, actually they kept rates flat and they did not move at all, the European Central Bank. But it's always about the speeches that happen afterwards. So first it was the Bank of Canada that came out. The governor Polosh came out, and he really said something that shook the airwaves. Mark Nixon posted, I think he was the first one who posted about it. After he cut, Polosh gave the speech saying saying that, unfortunately, this was his speech verbatim. Unfortunately, unless something else changes in Canada, our income will be lower than the otherwise, and they'll grow along the old path. Now there's a new path, which is actually below the old path. So we're on a low path. We're running parallel with the new path is running parallel with the old path. But today we're lower, and that he said the Canadians must accept a lower standard of living.
Can I translate that?
Sure, go ahead.
You're still going to go to work. You're still going to drive your car. You still might go out to dinner, and you still might watch your cable news. But you're going to have a lot less money in your pocket. So you're still going to do all those great things, but it's just going to be worse. And what's making all that worse, Jerry, is the fact that our government complains about our neighbors to the south who are going out all over the world and getting deal after deal after deal. We're sitting here saying we're no longer going to depend on this neighbor. We're going to go out around the world and get our own deals. But Jerry, I listen, I don't follow the mainstream, but I don't see those deals being, I see the promises of them. I see we're strengthening our relationships, but I don't hear the deals. But when I look at south, I see
You're seeing movement.
The deals.
Yeah.
I hear they made a deal with Australia for rare earths. They made half a trillion with Saudi Arabia. They made a this with this and this with this. And even this past week, $500 billion from Japan to build into the United States. Where are our deals? And if we don't have any deals, then where is our standard of living supposed to come from?
Mm-hmm. Well, we're stifling the very source of that standard, which is resources. We've stifled that. But it's funny that, after years of trying to put a cap on growth for the environment and going full hog green and solar, that those things are going down the drain. And that by force, we are forced to start making commercials now that the Canadian government is now going to be working towards potash and mining and getting the critical minerals secured.
Promises.
All these promises. But the deals could have been made. Ted Kennedy came out and said, all you got to do is drop your tariffs to zero, leave it at the table with the U.S. and see what they do. And they'll likely cut to zero and we'll start fresh. But Mark Nixon concluded it was after a decade of liberal madness and third world Canada is here. He says, I hope that kid-free lunch program was worth it. All the free lunch programs, all the free money, all the CERB. This was your tax money, your savings, your hard-earned wealth gone down into programs that ultimately went nowhere and got you nowhere except years and years of currency debasement. We are years behind, and there's no way to turn except back into something tangible, something into resource-driven that will grow your wealth. And to conclude, going back to this speech, he said, all we can do is try to bend that curve up somehow, but those things aren't things the monetary policy can do.
Correct.
It's going to be fiscal and the government. Are they going to stop spending, Jeremy? Are they going to do the right thing?
No. The spin will continue. For sure, the spin's going to continue.
Well, I had
but
spinning.
I remember,
my head is spinning.
I remember even Jerome Powell had enough with the Biden administration, and he said the same thing. He basically said, look, like we Our job is to control interest rates, and he didn't say this part, and, bail out banks if we need to. But we don't make the country's monetary policy, and we don't control how much debt they go into. We're only one half. We're here to help, right? Look, I'm not an apologist or a sympathizer for the central bank, but I understood what he meant. He's saying, look, if you're going to borrow your way to oblivion, what is our job supposed to be? How are we supposed to help in this regard? And they blame. So the Bank of Canada is doing the same. They're saying, look, we don't make your policies. You're spending the money. We're here. Like, if you're going to keep coming to us and borrow, and we have to go out and, auction off Canada bonds to Brookfield, and then Canadians owe it back at 6%.
Right.
Like, what do you want us to do? Where's your plan? Right? What's your plan? So it is a read between the lines, for sure. But who's besides Mark Nixon, who's amazing. Really, you got to follow him on X.
Mario Zelaya.
Who else is watching those things?
It's becoming more. I think the momentum's growing. The shift it's turning the tide in here in Canada. I think people, when you start hitting things, when this starts hitting home, and you start having to make your own austerity cuts. And I think that's what Polish was mentioning. Something that we can't do, but what the government can do is austerity cuts, like the harsh austerity cuts that Europe saw almost a decade ago, when they start cutting this program and that program. If you're going to see the austerity cuts. They don't even
have to, though, Jerry. I disagree. What they have to cut is the international spending, right?
Yes.
And then they just have to open up provinces to make it so that we can trade with each other and be prosperous together as a country.
And we have
but
the resources.
That's not what they want, Jerry. You're talking about the globalists against the American system. And the American system is American exceptionalism, abundance, growth, okay? Freedom and prosperity. The globalist system from Europe is the absolute opposite, because there's no longer the colonialism. They don't get to plant a flag on an island and say, this is ours, you guys work for us, give us the resources, we'll give you education. They don't do that anymore. That doesn't exist. The colonial empire has been collapsing for 100 years. So what are you left with? Globalism. And the answer in globalism is in the word itself. We have to get rid of borders. We have to get rid of cultures. We have to get rid of your pride in country. The people waving flag with their elbows up don't even know what they're waving for. They don't know what they're supporting.
No.
It's not donuts.
Right.
Okay? And it's not donuts. It's like, what are you waving for? Right? Except an anti-sentiment. It's an anti-sentiment. And if you were waving that flag in England, you'd be arrested. You'd be arrested. They want to get rid of the culture so that they don't want to you think you're trying to figure out, why are they opening the borders? Why are they making this worse for everybody? Why are they doing it to themselves? Because they want to control the systems. They want to control the UN, the World Health Organization, the Bank of International Settlements, all of the systems that were built up for the last 100 years. That's what they want to control. If they can control that, they control the flow of money, and they make a ton of money. They don't care about a flag. So it's the globalists who don't care about flags against a nation that does.
Exactly. Total opposite, and one that operates by taxing the people and telling you what not to do, versus one that, let's alleviate those taxes. Let's cut the income tax. Let's repeal the income tax. Let's go back to a gold standard and have that Gold Standard Restoration Act, and use the tariffs that once provided prosperity. And why are they doing this? What is the strategy? It's the age-old, the Cloward-Piven strategy. It's a political strategy, Canadians, outlined in 1966 by American sociologist and political activists Richard Cloward and Francis Fox Piven. It is the strategy of forcing political change, leading societal collapse through orchestrated crises. The Cloward-Piven strategy seeks to hasten the fall of capitalism by overloading the government bureaucracy with a flood of impossible demands, amassing massive unpayable national debt, and other methods such as unfettered immigration, thus pushing society into crises and economic collapse by overwhelming the system. that is overheating. Not gold and silver. The country itself is overheating.
Because gold and silver are universal. An ounce in Canada is an ounce in Europe, is an ounce in the Middle East. An ounce is an ounce, and it's where you can store wealth. It's not a currency. It's been a currency in the past, but you don't use it day to day. It is an asset that protects wealth. And if you're sitting here, as we have been telling everyone since when did we start this? 2010 or something like that? 2008. We've been telling you, you are going to lose your standard of living. Gold and silver can help protect that. They have done that. They have done that in spades. And we believe it's being revalued, and it's going to continue to give you the protection against what our own Bank of Canada is telling you, what we have been saying for more than a decade, which is you are going to continue to lose your standard of living unless you can be a genius wizard with investing, and I hope your advisor's helping you do that, or you can hold an asset that's limited in supply, that's precious, that central banks want to own, and for silver that is going to be used in all industries. And it's only going to get harder and harder to get because there's a deficit. You want to protect your standard of living? You want to grow your standard of living, increase your purchasing power? You can do that, we strongly believe, with physical gold and silver. Talk to your advisor. Ask them about, hey, would it be advisable to have 10, 15, 20% in a hard asset like gold and silver that's negatively correlated to the dollar, which looks like it's going down because they don't mind letting inflation run hot. You want to talk to them, talk to your loved ones, talk to your family. It's not complicated. It's very safe. It's very simple. We'll show you how to do it. The number, 1-877-8-SILVER. The website, guildhallwealth.com. Go to guildhallwealth.com and learn how to hold physical gold and silver right now. Physical gold and silver being purchased by countries, central banks. It is a new type of environment for the precious metals market. It's about revaluing an asset to help handle the debts. It's about owning a critical metal, soon to be critical metal, we hope, to make sure that your industry is taken care of, that when you want to build nuclear plants or AI processing plants or data centers, anything technological advancements, that you want to make sure that you're securing your supply. And so gold and silver are not just a safe haven for wealth, not just a way to protect against inflation and dollar devaluation, or, how do you handle the debt, right? It's about protecting your investment portfolio. It's about protecting your standard of living, and it has done so over the last 10 years. But even now, when we look at gold and silver, we say, are they undervalued, fair value, or overvalue? Not overbought, not oversold, but is it undervalued, fair value, or overvalue? And all of the fundamentals and all of the ratios point to gold's at a 13-to-1 ratio against the Dow, not 1-to-1, not 5-to-1, 13-to-1 or 12-to-1. How many ounces does it take to buy a house?
At the moment, it's 10,000 ounces of silver right
10,000 ounces of silver, probably 400 plus ounces of gold.
That's correct.
What's the gold to
pick one?
Foreign debt,
gold
right?
To beer
What's
ratio.
the ratio to foreign debt? All of these things, it just starts to point out, why would a central bank continue to buy it if it was at an all-time high and about to crash? That doesn't make sense. That doesn't make sense. That's not rational. We don't know central banks to be irrational.
They actually, in 1985, there was the Plaza Accord, which was a coordinated agreement among these central planners that are probably doing the exact same thing again today to weaken the U.S. dollar, to weaken your currencies. And as the dollars fell, metal prices like gold and silver rose sharply because they're priced in dollars. The accord indirectly boosted demand for precious metals as inflation and currency hedges worldwide, but it gave the countries an out. It gave them a way to grow and prosper while the currencies were going up in flames pretty much. And they're doing it again despite rhetoric and narratives from Powell this week. They also cut rate, but he backtracked. He said the reason why the dollar strengthened was because he's walking back expectations for a December cut. We're already seeing Fed rates futures trimming expectations right now, but that doesn't mean they're going to walk that through. They say one thing and they do the next. Their policy has always been the same. They always say that we're going to support the U.S. dollar and support employment. They're failing on both fronts, people. They're failing at their job. They're going to continue to weaken. So cut through that microphone. They might as well just unplug their microphone.
But also a weak dollar helps them pay off the debt, like helps the country pay off the debt.
Yeah, you need
so
to.
So you don't mind a weaker, you just don't want it to crash, right? But you also need to stop going into debt.
Well,
you
if
need
you're
to stop the
right?
debt. You need to create prosperity. You need to lower energy prices, and you have to lower the dollar a bit to pay it all off.
In a coordinated
right?
fashion, it won't free
fall.
fall.
It certainly seems that a reset in gold is a process. It's not an overnight thing, and revaluing silver is not an overnight event. It's a process. And it definitely feels that this year has been part of that process. I know we're only just about to head into November here as we record the show on October 30th, but the year's not out, but it certainly feels like this year, 2025, has been about letting gold and silver rise and revalue. And I'm excited to see what the rest of the year looks like and excited to see what next year looks like. Let's talk about some forecasts. We mentioned last week on the show, JP Morgan believes gold can go to 8,000 within the next 3 years. They've also, I saw a post on King Kong on X.
Eric
Young was saying that JP Morgan now solely controls the ETF, that before HSBC, I guess, were part controllers of it. And he said now it's 100% American controlled. No longer British controlled in any way. It's now 100% American controlled. And it made me think of Ted Butler. Mm-hmm. Do you remember what Ted Butler used to say? He used to say JP Morgan has all the silver.
Yes.
And when they want to release the button, they could release the button and they will make a lot of money when it goes up. You make more money when it goes up than trying to control it forever, right? Because eventually people are just going to do what they've been doing, which is buying the physical anyway. 18778 silver, guildhallwealth.com to get your physical metal. But but yeah, now it's like, oh yeah, this kind of maps on to what Ted Butler said. Forecasts.
Yeah, echoing those sentiments for sure. And we're seeing that positioning. And all we have to do is just follow that smart money. Follow what the JP Morgans are doing. And this is why we look at outlooks. We're looking at a 5-year investment outlook. Nearly every single major bank, gold price, silver price prediction in 2025 printed higher. What are they saying for the next 5 from 2026 to 2030? Their outlooks. And just looking back over the last 5 years, gold's up, approximately 48% in the last 5 years plus. So we're seeing this.
I thought that was just this year alone.
Oh, you had 2020 was up 25%. Down year in 21, down year 22. Why? They were cutting interest rates in the U.S., or they were raising interest rates rather, boosting the U.S. dollar. And in 2023, up 13%. Last year, 2024, up 27%. And then we're continuing higher. Gold is up 53% going higher. But what are the banks saying this time around? The consensus among major financial institutions have shifted. You have even Canadian banks shouting the praises of silver, looking to acquire silver, and they're moving into the space of the commodity space and looking what these precious metals do during times of stagflation. So we have HSBC first. HSBC sees a bull wave taking gold to 5,000 ounce by the first half of 2026, lifting their annual average forecast to 4,600. Next, you have Bank of America. They raised its 2026 target to $5,000 an ounce with a $4,600 average.
I'm going to stop you there. Let's take a break. Pick it up.
Waiting to exhale.
For the next segment. The number 18778 silver. The website, guildhallwealth.com. Gold and silver have proven track records to protect wealth against inflation. We have the Bank of Canada telling us your standard of living is going to drop. That is a direct result of inflation. Stick with the quality controlled assets that are proven to protect against that. Gold and silver, they are being revalued. The number 18778 silver, the website guildhallwealth.com. I hope we have been making the case for gold and silver amazingly simple. I hope that as you've been listening to the show, you're finding what we've been discussing compelling in terms of why we believe you should own it. If you're thinking about getting involved, give us a call. We can go through the stories, the arguments, the breakdown of what it looks like to acquire physical metal. For many people, that's a new thing, and they have to kind of understand how it prices, what types of products are available, where does inventory come from, all of these things, which we still have shortages, by the way. The number 18778 silver and the website guildhallwealth.com. Just before break, we were talking about some forecasts in the market. Let's pick up from the beginning again, just to get everyone caught up on what the major banks see for gold and silver going forward.
Yeah, so here's what the street is calling for. HSBC sees a bull wave taking gold to 5,000 by the first half of next year. Next, we have Bank of America raising its forecast 2026 target to also $5,000, citing policy uncertainty and surging investment demand. JP Morgan, obviously we've been discussing them, anywhere from 6,000 to 8,000 in the next few years. The bottom line forecast, the range varies. Jeremy, we know these forecasts have pretty much always been conservative. We see constant revisions of their forecast. We had Wells Fargo today do another one, so that's another bank coming on board, revising their call for gold from 3,600 an ounce up to 4,800 an ounce by next year. And even Morgan Stanley making the big call, along with Goldman Sachs. What are we doing with our portfolios? What are you doing with your RSPs? How are you diversifying your RSPs? Well, with Guildhall, we own physical precious metals. We only do physical here. We only deal with the real money, which is portable, durable, divisible, recognizable, and scarce and intrinsic. You want to get something that is going to be relevant for your portfolio, which will last forever. And this is what we want to do, is generate generational wealth. And how to strategize, Morgan Stanley recommends eliminating the 60-40 portfolio, allocate 20%. What are your allocations? We are not financial planners, but we do recommend higher allocations than the norm. The 5 to 10, I think that strategy is very old. That strategy came from 2011 when there was no QE yet. QE1, QE2, money printing. There's a lot more debt now. We just crossed $38 trillion in the U.S. We have a lot more debt to deal with. So the strategy is very, very simple. You want to give us a call. If you have an RSP, you want to own it physically, you want to take it home, go to the website, get some tubes of silver maples. We have half-ounce gold bars, which are really good, a really good price point. If you feel that the 1 ounce bars a little bit of too far of a stretch at 6,000 plus, you can get into a half-ounce gold pamp bar. Those are beautiful. Your thoughts on the physical right now, Jeremy? What are your clients talking about?
Well, I do think that there's going to be more and more issues going forward with availability. It's been really interesting to see that even with a pullback, it's not like the product just appeared out of nowhere. There are shortages, make no mistake, and it's only going to get harder and harder. Now, price does fix that, right? You're buying a lot less. You're now buying a half ounce instead of a full ounce, right? It is a great product at guildhallpreciousmetals.com, but I do think that you don't want to wait too long to be able to get in. I do fear that there's going to hit a point where there's just not any product available. Forecasts look great. Those were conservative forecasts from major banks. When you think about forecasts from people with inside our industry, you can get numbers that look good to crazy. But even people like Rick Rule, a couple 100% for gold, maybe 300% for silver. We mentioned Luke Groman earlier. According to his ratios, you could have gold easily go to 15,000. We have Nick Barishev once upon a time said 10,000. That's becoming more and more realistic. And as I talk to people from the microcosm of my desk, it feels like that $100 silver plus, triple digit silver, does not seem unreasonable.
Absolutely. Just the key takeaway to this U.S.-Japan strategic agreement. It's a $550 billion strategic framework, Jeremy, that they just passed on Monday. And most of the core goal has to do with the chains, the secure supply chains for critical minerals that include silver to reduce their dependence on China. And what this means is silver, its role in defense and technology are just booming, and they're going to continue to rise. Silver is moving from just an industrial byproduct to a strategic national asset. November 9th seems like the cutoff date where the U.S. Department of Defense could include and designate silver as a critical mineral. And look at what the previous critical minerals did. They multiplied when they were added. Lithium and uranium, you have cobalt.
Maybe
they multiply.
Maybe that's what the rush to make these deals has been about. Right? Get the deals first, then call it critical.
That's right. And if you follow Daniel Galley, TD, Director of Commodities, you buy into the silver stock out. The silver squeeze is not coming from retail, you and I, but from governments and defense contractors and countries that are looking to stockpile the stuff. And he sees within the next few months that the silver to gold ratio could be dropping about 10% into the 70s, which would mean a catapult higher in silver. You want to give us a call.
Physical gold and silver, it's sound, it's trusted, secure, and stable. The number 18778 silver. The website, guildhallwealth.com. If you've missed a show, catch us on YouTube, catch us on Rumble, follow us on X, and thank you so much to everyone who took a little bit of time today to listen to our show. It's been great to have you with us. Great to speak with you, Jerry, and can't wait to speak to everyone next week here on The Real Money Show on 640 Toronto.